22 deals over $10 billion in one quarter. The mega cap buyers are absolutely feasting right now.
Talk to anyone in the mid-market and they're crying into their Patagonia vests. The K-shaped recovery is real. The bottom half is completely frozen.
Hey, I used to wear one of those vests, but you can't ignore QXO dropping $2.25 billion on Kodiak today.
I'm actually more interested in Brookfield quietly swallowing $3.2 billion in pension assets.
The big fish are definitely eating. Let's look at who's next on the menu. The rundown. 22 deals over $10 billion in the first quarter alone. I was talking to a mid-market guy yesterday who looked like he had not slept since November.
It is the absolute definition of a K-shaped market right now. If you are buying an AI startup or you have the balance sheet for a mega deal, the financing windows are wide open. If you are trying to sell a $200 million software company, you are basically talking to a brick wall.
Wall Street is split into two completely different realities. The mega cap buyers are living in a boomtown, and the mid-market folks are fighting over scraps. But speaking of heavy armor to protect against that reality, Arclin just picked up DuPont's Aramids business,
Taking control of Kevlar and Nomex, which is fascinating because DuPont has been trying to figure out what it actually wants to be for a solid decade now.
shedding the iconic brands to streamline. But Arclin gets a massive bulletproof brand moat, literally. Almost as good of a moat as literal trash. GFL Environmental is buying Frontier Waste Solutions down in Texas.
I love waste management deals. The route density math is always beautiful. You buy the local guys operating in your footprint, and suddenly your trucks are picking up twice the trash on the exact same tank of gas. It is a perfect spreadsheet.
You get giddy about garbage logistics, but I am looking at caffeine. Keurig Dr Pepper is buying JDE Peets. They are putting Rafael Oliveira in the CEO spot of the newly formed entity, which they are calling Global Coffee Co.
Global Coffee Co. Honestly, that sounds like a fake evil corporation from a 90s action movie.
Come on, it is clean. It tells you exactly what they do.
It tells me they spent exactly $0 on branding. And I am absolutely not convinced that mashing two massive slow-growth coffee portfolios together magically creates a high-growth business. It is just a bigger pile of beans.
A bigger pile of beans with massive global supply chain leverage. You are completely underestimating how much power that gives them over grocery aisle shelf space.
I will believe it when I see the margins. Give me the footnotes on their first combined earnings call, and then we can talk leverage. Meanwhile, Brookfield Wealth Solutions just finalized its $3.2 billion buyout of Just Group,
Adding 700,000 customers in one swoop.
and pushing their global insurance assets under management to $180 billion. Brookfield is just quietly eating the entire pension and annuity space while everyone else is distracted by the AI shiny objects.
They are the ultimate vacuum cleaner right now. But if you want to talk about quiet roll-ups turning into absolute monsters, we need to talk about what is happening over at QXO. $2.25 billion for Kodiak Building Partners just officially closed. The big one.
$2.25 billion for Kodiak Building Partners.
And just like that, QXO proves they are not messing around.
They bought it from Court Square Capital, which tells me Court Square looked at this market, looked at the valuations, and decided to take their chips off the table.
Or they just got an offer they could not refuse. QXO is basically trying to eat the entire building materials sector. They are claiming this single acquisition pushes their addressable market past $200 billion.
You know how much I hate the phrase addressable market.
Oh, I know. It is a banker's best friend.
It is a completely made-up number. 200 billion. Sure. Why not 300? Just draw a bigger circle on the PowerPoint slide.
Hey, do not attack my old pitch decks. We worked hard picking the colors for those circles.
I am sure you did. But seriously, if you read the press release, they are touting this massive expansion. But I am looking at the actual market dynamics. The only reason this deal happened is because QXO has the balance sheet to brute force it.
I think that is a little unfair. It is a brilliant consolidation play. Well-capitalized buyers are just dominating 2026. You cannot blame them for pressing their advantage.
I am not blaming them. I am just pointing out the reality of this K-shaped M&A market. The divide right now is stark. You have these mega cap buyers easily securing financing for multi-billion-dollar acquisitions. Meanwhile, the mid-market dealmakers are completely frozen.
Frustrated is the word I am hearing from my old network.
Because the math does not work for them. If you are a mid-market PE firm trying to buy a regional distributor right now, the debt is too expensive and the sellers still want yesterday's multiples.
I disagree that it is just about expensive debt. I think it is entirely about the narrative. Look at the data from the first quarter. 22 deals over $10 billion. That is a quarterly record. The financing is absolutely there if the story is good enough.
If the story involves AI, maybe. Everybody is throwing money at AI advancements.
Or if it involves a massive operational moat. Building materials has a huge physical moat. QXO gets that. Just like Arclin buying the Kevlar brand from DuPont this week, you buy the moat.
I will give you that. Physical supply chains are very hard to disrupt with a chatbot.
Exactly. And speaking of massive moats and well-capitalized buyers flexing their muscles, we need to talk about what Brookfield is doing.
The pension grab.
$3.2 billion for Just Group.
Brookfield Wealth Solutions just bought themselves 700,000 new customers.
Which pushes their global insurance AUM to $180 billion. We are seeing the exact same K-shaped dynamic play out in financial services. Should we look at how they actually structured the Just Group buyout? Voices. So every analyst note this week is using the exact same phrase, a K-shaped recovery.
I saw that. They're literally just copy-pasting it from each other at this point.
But the data actually backs it up. Market watchers are pointing out that Q1 just set a quarterly record, 22 deals over $10 billion.
Right. And they're blaming it on improved financing conditions and an insatiable appetite for AI, which is where I completely disagree with the narrative.
You don't think AI is driving this? The multiples are completely detached from reality.
For a handful of tech deals, sure, but look at the actual list of what's closing. Is QXO buying Kodiak Building Partners for $2.25 billion in AI play? No, it's literal building blocks. Is Brookfield grabbing Just Group for $3.2 billion about machine learning? No, it's a pure pension grab to push their insurance AUM to $180 billion.
Okay, fair, I'll give you that. But you can't deny the tension on the street right now. My old mid-market banking buddies are absolutely miserable. The mega cap guys are writing multi-billion-dollar checks, and the mid-market teams are staring at a completely frozen landscape.
Good.
Good, wow, remind me never to ask you for sympathy.
I'm just saying, the mid-market got bloated. Court Square getting $2.25 billion for Kodiak proves that if you have a real asset, well-capitalized buyers will still pay up. QXO just expanded their addressable market to $200 billion. That isn't a frozen market. That's a disciplined market.
Spoken like a true spreadsheet warrior. I still think the financing divide is brutal. If you're not a mega cap buyer, the debt markets are just hanging up the phone.
Which brings us to the real question of who manages to sneak through the regulatory net tomorrow. Have you looked at the dockets?
You mean Mitsubishi trying to buy Infinity Lifts? Or the First Sun bank merger shakeups?
Both. Let's see if those integration plans actually survive contact with reality. Spill the tea.
I'm telling you, the group chats are miserable right now. If you're a mid-market MD, you're basically just playing golf and pretending to be busy.
Because no one can close a deal under $5 billion.
Exactly. Everyone is calling it this K-shaped M&A market. The top line of the K is just mega cap buyers throwing around billions like it's monopoly money. Q1 of 2026 had 22 deals over $10 billion. 22.
Wait, 22? I knew it was high, but that's a quarterly record.
It's a massive record. Financing conditions for the big guys are basically perfect right now.
Hold on, I need to push back on the narrative here. It's not that financing is magically better across the board. It's entirely driven by this insatiable AI appetite. You strip out the massive AI funding rounds and tech mega deals, and that top line of the K flattens out real fast.
Oh, come on. You can't just strip out the biggest driver of the economy and say, look, the market is flat. That's like saying if you take away the caffeine, espresso is just dirty water.
I mean, it kind of is. But my point is, look at the mid-market folks. The landscape is completely frozen. You try getting debt for a basic $200 million manufacturing roll-up right now. The lenders will laugh you out of the room.
Yeah, the tension is real. I heard about a boutique firm last week that had 3 term sheets pulled in 48 hours. Just brutal out there.
Which brings me to the regulatory dockets we are watching for tomorrow, because if these mega deals are the only ones closing, the antitrust watchdogs are going to wake up.
Oh, absolutely. I'm keeping my eyes glued to Mitsubishi Electric, trying to push through that Irish elevator buyout infinity lifts.
Same. And we should finally get some early integration updates on the First Sun Capital and First Foundation Bank merger.
Assuming they've actually figured out who gets the corner office. Tomorrow's radar. I'm telling you, Wall Street is tense right now over this K-shaped market. Mega cap buyers are printing money for AI, while the mid-market guys are just sitting on their hands.
Oh, please. The mid-market isn't frozen. It's just properly priced for once. But fine. If you want drama, watch the leadership announcements tomorrow from the First Sun and First Foundation Bank merger.
Exactly. 2 management teams walk into a room, only one walks out. Classic banking theater.
I'll be watching the regulatory dockets. Mitsubishi Electric needs to get its Irish elevator acquisition, Infinity Lifts, across the finish line.
Wait, an elevator company? Are the regulatory hurdles going up or down?
You really went there.
I had to. I'm weak. But honestly, with 22 deals over $10 billion last quarter, regulators are completely swamped.
Which means Mitsubishi might be waiting a while in the lobby. Speaking of waiting, we need to look at Arclin taking over DuPont's Kevlar brand right after this break.